Good morning and welcome to the Killik & Co market update. This week we've been looking at the iron ore price, which has spiked quite significantly over the last few weeks because of a reduction in supply. What's the reason for this? Well, one of the largest iron ore mining companies in the world is a company called Vale, which owns and operates a number of iron ore mines in Brazil. As is quite standard, these mines are linked to dams which collect the waste liquid from the mining process. On the 25th of January this year, one of Vale's dams collapsed and it sent a flood of wastewater into a nearby village, killing over 160 people. Unsurprisingly, that mine is now closed, and also the Brazilian government has stepped in and forced the company to close another 10 mines while some safety checks are carried out. So clearly that's very bad news for Vale. If you have a look here, you can see the share price has lost nearly 25% of its value since that disaster happened. But a side effect of this is that there has then been quite a severe shortage in the supply of iron ore. So that's actually pushed up the price. So have a look at this chart here, which shows the price of iron ore over the last year. You can see it has spiked nearly 20% since this disaster happened at the end of January. And actually this has been quite good news for other iron ore miners who are benefiting from these higher prices. So have a look here at the share price of Rio Tinto, which has risen quite significantly since the end of January. Now, it's possible this price spike may be temporary, so we would recommend that you give us a call to discuss your holdings if you do own Rio Tinto or BHP Billiton. Also in focus this week, we've got the ongoing negotiations between the US and China, which really do seem to be making some progress. This week, both sides published 6 memorandums of agreement, which just demonstrate the 6 different areas that they are trying to come to some sort of formal agreement on. Here are the 6 memorandums and the topics they cover. So one is forced technology transfer and cyber theft. That's something the US has long been accusing China of doing. Intellectual property rights, that's something that the US accuses China of not respecting. Currency, the US has long accused China of manipulating its currency and trying to make it weaker so that China's exports will be higher. Agriculture, that's one area in which they've suggested perhaps China could buy more from the US in order to reduce the trade surplus. So lots of different areas here in which some agreements could be made. Now, the last that Trump said on the matter was that if agreements were not in place by the 1st of March, he would be imposing further tariffs on China. However, that's only a few days away, and it would be a surprise to see more tariffs imposed, given that both sides really are trying to compromise and trying to come to some sort of agreement. So at the moment, it does look fairly likely that there will be an extension to that deadline of March the 1st. Now, we're always on the lookout for new investment trends or new themes, and something we've been looking at a lot recently is the increase in popularity of vegan food. We've seen companies like McDonald's launching vegetarian-only menus with lots of vegan specials. We've seen companies like Danone, the major French yogurt company, making a major acquisition into a company that makes non-dairy milks. And this week, something that caught my eye was a trading update from the bakery company Greggs. They had a very good trading update, and they've specifically credited the popularity of their vegan sausage rolls. So this is a theme that we really are keeping quite a close eye on, trying to see whether it is just a fad or whether it is a longer term theme. Taking a look at the week ahead, we've got quite a few companies reporting. We've got emerging markets bank, Standard Chartered. We've got major European chemicals company, BASF, and also house building company, Taylor Wimpey. That's it from us. Have a great weekend, and we'll see you next Friday.